Welcome to Exchange Rates UK TV. It is the 14th of February 2021, taking a look at VeChain. VeChain's got some pretty significant gaps now from the last 3-week candle and now the current 3-week candle, which is a brand new one. Between the gap exists between the Tenkan Sen and the bodies of these candlesticks. So there's a very high likelihood that every day that goes by is going to be another day where there could be an imminent kind of violent corrective move to return to equilibrium at the 11-cent range, or almost 12 cents, which is a little more than double what it is right now. But other than that, I mean, there's not a ton of information to be gleaned from the 3-week chart because we don't have a complete Ichimoku suite of indicators to trade off of until we get to October of 2022. So that's a little while yet. Looking at it from a weekly perspective, I mean, it's bearish all around. I mean, this is an ideal bearish Ichimoku breakout that it's in. It's actually completed that on the week of the 17th of January, but haven't really seen, some really sustained continued follow through selling pressure. Volume has really kind of planed off a lot since May of last year. On the weekly chart, it's just kind of died out and fizzled off. It's below the Tenkan Sen, the Kijun Sen, the Cloud. Everything here is very bearish. The last time it was trading above, had a weekly close above the Tenkan Sen. That was back on the week of November 8th when it was close to an ideal bullish Ichimoku breakout. But of course, we never got that achieved. But otherwise, I mean, it's holding this zone in that 5 to 6 cent range fairly decently, and there are some signs that we could see it get a little bit of a pickup and reverse here, especially with the bullish cross above the fast-moving average in the composite index and a return above 0.2 in the percent B oscillator. Zipping on over to the daily chart. So here's this tight range. This is very common on a lot of altcoin charts, but you've got kind of this tight range that it was trading in, and holy cow, that is a very thick border on that. Let's drop that down a little bit. So there's this range that it was trading in, and then we had the breakout on the 4th of February. This really looks like it's just like the first retest of that breakout above that range. And from a daily perspective, it looks pretty supportive to see it trade higher here and continue to push up. I mean, there's hidden bullish divergent. Oh, wait, no, there's not. Not on this chart. There was on the other chart I was looking at. But you do have this bottoming point here in the. Oh, wait, no, actually, yeah, we do. I'm sorry. Yeah, this was the right chart. You have lower lows in the composite index, higher lows in the price chart. That is hidden bullish divergence, and that hidden bullish divergence shows up while it's testing a support zone. That is a very strong sign that we could likely see it trade higher. But again, I mean, it's not far away from a really big major collapse either. The only thing preventing VeChain from experiencing a continuation move south is that the Chiku span is not at like 5 cents. If it closes at 5 cents or lower, kiss it goodbye. It's going to nosedive likely down to the 100% fib expansion at 0.038. 0.037, or even lower to the 1618 at the 0.0137. I think that's a little bit of a stretch, but certainly a retest down to 0.037 could be very likely. That is something to watch out for. So as far as upside potential, if it does find a bottom here, the upside potential is likely going to be limited to that 7.5 cent range where the top of the cloud is at. So that's something to watch out for. But other than that, that does it for me on VeChain. I'll keep it updated as we go along. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like, comment, and subscribe.